Hello, everyone. Ladies and gentlemen, good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to be with you here this morning. Very excited for live, and I can't wait for us to start another fresh new look at the financial market. But before we begin the session, let's quickly confirm that we are all on the same page. So if you can see my screen, you can hear my voice loud and clear without distortion. Feel free to let me know in the comment section by typing in hi. So once you type in hi, I get a positive feedback from my own hand here, confirming that we are all on the same page. So I would love to see your feedbacks, please, in the comment section, and thank you very much as you do so. All right. Thank you very much, guys. I'm loving the energy in the house this morning. From Panel U621 to Crazy 987, Leonardo DV 123251, Dildo Mafi 89. Good morning to you guys. Hello, Carrie. How are you doing this morning? And fine 59632. Hi. Okay, Kirill 88. Thank you very much. Leonardo DV says here no visuals. Please, I would like some confirmations in the comment section as regards to that. Are there truly no visuals? From my hand, things are working quite fine. Please let me know in the comment section if truly there are no visuals. Or I will suggest that Leonardo DV tries to restart. Oh, all right. Leonardo DV just commented. Thank you very much for your feedbacks. I really do appreciate that. Tisha, Impressor, Jenksy, Isaiah 168. Well, thank you very much. I really do appreciate this feedback. So I think on this note, we are very much good to go. And on this note, I'm so excited to welcome you to yet another promising edition on the X Trend Speed Live. My own name is Sheriff Daramola, and for the next 1 hour I'm going to be your host as we will be taking a technical dissection of the current market structure using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today's New York session. Well, the last 24 hours has been of mixed reaction for us in terms of performance. We had a couple of losses yesterday, but we also had some couple of profits, and we have things balanced out, and we are going to be looking at how things went on in the last 24 hours and how we intend to use the historical data we have on the chart to strategically position ourselves for the next move today. And as a result of this, I encourage us all to stay tuned in, grab your favorite beverages or drinks, and let's dive right into the business. But before I go into the details, my newcomers in the house, I'm so glad to have you around with us in this community, and I'm very sure you will be wondering what this is all about. Don't worry, I will explain to you what we do here and how you stand to benefit from the session on a daily basis. So as technical traders, we usually gather here every day to come together as a community and engage in follow-ups and reviews of our current positions in preparation of the New York session. This session officially kickstarts 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in so you don't miss out on any of the valuable insights that we will be sharing today. My aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you get to understand or comprehend our analytical approach and utilizing the information gathered here in this community to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be affecting the market sentiments today. And of course, you know how important this is, as these factors, fundamental factors, often manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So for this week, and based on the assets we have been monitoring since the beginning of the week, we shall be focusing on high impactful event from both the United States and the United Kingdom economic docket. Well, so far this week, we really have not witnessed a high impactful event. Neither do we have for today, Wednesday, January 10th. But what I did here was to include the medium impactful event so that we can at least have a perspective into what majority in the market will be looking forward to today as a catalyst to drive price action. And when I did that, I was able to come up with two events coming up from both the United States and the United Kingdom economic docket. Now, the first one we are looking forward to today is coming up in about 4 to 5 hours from now, and that is the most important event for today, which is the Bank of England's governor's speech. That is Andrew Bailey's. We will be talking today, and of course, whatever he says today is going to be giving market participants an insight into the monetary policy outlook of the Bank of England, and of course gave us an insight into the health situation of the United Kingdom economy. Remember, last week we saw how major leading business owners in the United Kingdom were clamoring for a rate cut in interest rate, as the current rate is really detrimental to the businesses in the United Kingdom. And as a result of this, majority will want to see what the Bank of England governor is going to be saying as regards to this, and what is going to be the trajectory of the interest rate in the nearest future. Though we had some speeches from some of the monetary policy makers in the United Kingdom where they suggested that there is no interest rate cut on the table for now. So we want to see what the Bank of England governor is going to be saying. Now, later on today, we look forward to the in the United States. It's in about 8 to 10 hours from now. That is the speech from John C. Williams, who is the president of the Federal Reserve Bank of New York. And of course, he's going to be giving a speech today, and this also will be on the radar of market participants, as they do want to know how soon will the rate cut begin, or if possible, there is going to be a rate hike. As you will see, the US economy has been very resilient in recent times. So these are the impactful events we will be looking forward to today. And of course, as technical traders, we do know that the anticipation of this event is going to be affecting the market sentiment, which on the long run will dovetail and reflect on the chart as price action. So with that being said, here we will be diving right into the business, And unfortunately, I did not load up my US All Sport chart, so it's going to take quite a while before this chart loads up. So let's give it a couple of seconds or so before we begin the session. So here we go. The first asset we are going to be looking at this morning is going to be the US All Sport. And in fact, the last 24 hours has been quite impressive on the US All Sport, as we did capitalize on a buying opportunity during yesterday's trading session after price action did break out of that level at the $71.20 level, and we saw how price did move about a 150 pips in our direction before the bearish momentum began. And for those of us who capitalized on this opportunity, I do hope you moved your stop losses accordingly. If you had done so, you must have been taken out of this position with a reasonable amount of profit. And as it is right now, we begin to see some interesting setup going on in this market, so we shall be looking at that in a moment. But before we go into the details, the technical details on this chart, it is very important for us to understand the reason behind the recent surge in crude oil prices and what is going to be happening today as regards to what will be driving the market sentiment. Now, the recent surge in crude oil prices is underpinned by several factors, which we will be talking about in a moment. Notably, the crude stock data from the United States from yesterday's report exceeded market expectation for the week ending January 5, revealing a substantial reduction for the crude oil stockpile. Furthermore, concerns about oil supply intensified following a significant attack by the Iran-backed Houthi militants on vessels in the Red Sea. The American Petroleum Institute released its weekly crude oil report, indicating a substantial decline of 5.215 million barrels, surpassing the expected fall of 1.2 million barrels. And if we look at this, and if I get my calculations right, it's about 4 million deficit compared to what the expectation had. For me, this is a very high variance, which further shows that the demand has increased. And whenever there is a demand, an increase in demand, we expect the price of that asset to soar. And as a result of this, we saw a over 150 pips move from yesterday's trading session to emphasize this detail. Now, today, the U.S. Energy Information Administration is set to release the crude oil stock change report as market participants await crucial insight from today's report. Our strategy at this point is to rely on our technical skills, identify key structures, and see how we can strategically position ourselves for the next move. Now, in that regard, let's scale up into the daily time frame. Let's see what we saw at the beginning of the week. And for the sake of those who are joining us for the first time, they have the privilege of being on the same page with us. So, scaling up into the daily time frame, this was what we saw at the beginning of the week, and this played a major role in guiding our decisions. So the first thing we saw on the daily time frame, after taking into consideration the nature of price action since the month of September, we saw how price action had consistently and uniformly found lower highs in this market. And as a result of this observation, we did connect the series of lower highs, giving us a beautiful descending trend line to work with. And as long as price remains below our descending trend line, we want to be looking out for patterns and structures that supports the idea of selling. But how come we came up with the idea of buying this asset at the beginning of the week? Well, if we zoom into this current structure and look at what started happening here in the month of December, despite the strong bearish momentum, we saw how it became difficult for sellers to break through the $69 area. Now, this persisted and went on. If we look at what happened in the month of January, that is the beginning of this month, we saw another rejection of that area, and in fact it gave us an higher low, which reveals the tendency that there is likely going to be a build-up of bullish momentum behind the scenes, giving us an ascending trend line to work with going forward. Now, in addition to the structures here, we did of course emphasize the reversal setup that's resulted from the rejection of the $69 area. As you will see, following this impulsive move into the structure, we saw how price came back into this area, and in fact a higher low here is giving us signs that we may likely be seeing a reversal setup, though this is yet to mature, but we are projecting the neckline of that potential reversal pattern around the $75.50 level and the $74 area, where we are expecting that a breakout of the zone will be all we need to confirm that price is going to the upside. And one interesting thing about this neckline zone is the fact that it also shares a confluence with those descending trend lines. So what this simply means is that when price breaks out of the neckline, price would also have broken out of the descending trend line, hereby emphasizing the fact that the trend line may no longer have the capacity to continue to negate the bullish attempt. Now, this whole structure here makes things very, very interesting ahead of this week. Now, to guide our decisions, we did have a key level situated at the $74 area, where we are expecting a breakout to further give us a beautiful confirmation of joining an uptrend situation. Now, with the information we gathered here on the daily time frame, we went ahead into the 1 hour time frame, where we begin to understand how market participant has been reacting to this current structure since the beginning of this week. Now, when we scale down into the 1 hour time frame, we begin to see things more clearly. Now, right here on the 1 hour time frame, it was obvious that the week started on a bearish note. Price started around the $73.75 level, dropped into the $672.65 level, giving us a range to work with for this week. And as a result of this range, this range here, you know how we do it whenever we identify a flat channel. We exercise patience and wait for either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And of course, we did see price break down the support line during our live session on Monday, giving us our first sell position for the week as we rode that momentum, giving us over a 240 pips move. And then you know how we do it when price action moves significantly well. We move our stop losses accordingly, and on that single move we should have been able to close with a minimum of a 150 pip move, though this is dependent on where you had moved your stop losses to. Now, during our live session yesterday, we saw a range again around the $71.20 level, which interestingly shares a confluence with that ascending trend line we spotted on the higher time frame. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that supports the idea of buying that asset. Now, with the situation we had yesterday, a breakout of the resistant line of that range, are we going to see price come back to retest the structure today in anticipation of another wave of bullish momentum? Well, let's see what is going on in the last 24 hours. Now, one thing you will notice here in the last I think about 20 hours or so, we can see that despite the strong bullish momentum, which was as a result of the report from the crude stock data from the United States yesterday, we begin to notice that buyers found a barrier around the $72.65 level. And every attempt by the buyers to break out of this structure has been met with strong resistance from the sellers, as you will see right here. Now, as a result of this, it is very important that we take into consideration the potentials that sellers also have around this area. Now, let's relate this latest development with the current structure. Remember, at the beginning of the week, we had a range between the $73.75 and the $72.65 area, remember? And then we saw price broke down the support line to give us our first sell position for the week. And I can still remember vividly mentioning that whenever price gets into this area, we move our stop losses accordingly, secure the current position, as we want to see how the market will react to that structure. And this is simply because of the technical expectations that whenever price breaks down a structure like this, we expect price to come back to that area at some point, retest the structure to incite a sell-off to the downside. And in fact, in the last 20 to 22 hours now, the continued selling pressure here may likely incite a sell-off at this point to incite a downtrend move. However, in as much as the sellers continue to push price to the downside here, we still need to be very careful, as we have a couple of juncture here which has a potential platform for bullish opportunity. The first one is the neckline of this reversal pattern, and the second one is the ascending trend line we spotted on the higher time frame. And when price remains above ascending trend lines and the neckline of a double bottom structure, you expect that we still have a tendency of buying that particular asset. So as it is right now, we could see sellers push price into the structures here in anticipation of another wave of bullish momentum. So for those of us who capitalize the selling opportunity at the breakdown of the $72.20 level, well done, but please ensure you move your stop losses accordingly, as we're still within a reversal setup. And let me see how many pips move is this one from here to here, giving us a minimum of 100 pips, which is what taking advantage of. So if price get to this area, that is if it goes that far into the $71.20 level, please further move your stop losses, secure your positions while we wait and see how the market will react to both the neckline and that ascending trend line to decide what our next line of action will be. So if we see buy pressure here again, like double bottom structure, head and shoulder pattern, we do want to be part of an uptrend move. Whereas if price breaks down the structure, retest will definitely welcome selling opportunities. So let's see how this is going to play out for today. However, if price does not drop down and instead continue to find bullish momentum from this area, I'm of the opinion that a breakout of the $73 level could welcome buying opportunities, while a further breakout of the resistant line of that range at the $73.75 level will welcome more opportunities to buy, and the breakout of the $74 area will make us maximize the potential of this bullish move. So I'll only be looking out for more buying opportunities after price action takes out all the sell positions within the 73 and the $72.65 zone. So that is, I want to see price break out the structure for me to feel confident joining a bullish momentum. So as it is right now, price remains below that zone. We maintain a bearish bias, but if price breaks out of that structure, we're going to be buying. And remember what I said earlier, while we sell below the $72.20 area, as soon as price gets into the structure, please move your stop losses accordingly, secure your position while we wait to see how the market will react to that area. So this is my simple view on the US All Spot today. I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever as regards to the current setup, or you need me to do some clarification in a particular area you really did not understand, feel free to let me know in the comment section. So as a result of this, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right. I see a couple of comments here from Gianni and Jenksi. I hope I pronounced that correctly. Who says that is new here, and Jenksi is asking if we have a signal, and Gianni is asking for us to explain what we do here. Okay, let me quickly rephrase this. I did explain this earlier before we began, especially for those who are joining us for the first time. So the extreme speed the extreme speed technical analysis session with me is designed to equip you with the knowledge and skills necessary to make your own informed trading decisions independently. Now, I always encourage that participants should ensure to be part of the subsequent editions, as the more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information you gather in this community to enhance your own trading decisions and strategies. So this is basically what we do here, and it happens on a daily basis, 10 a.m. UTC, 11 a.m. West African time. So it lasts for about an hour. So you have the privilege of coming here to be part of this trading journey and see how we manage our existing position, and of course how we strategically position ourselves to take advantage of the next trading opportunities during the New York session. So you guys are welcome, and I do encourage you to be part of our subsequent editions. Trust me, with time you get to understand how things works here. So I hope I made myself clear. Gianni and Jengsi, I see your comment. Hi, Marketer, good morning to you. Hauta 2K2, good morning to you. Glad to have you around. It's okay, at least you still joined the you're still part of you're still going to be part of most of what the session entails. So welcome, and do take your favorite beverage and be part, and don't miss out on the remainder part of the session. So with that being said, and in the absence of no questions, I want to assume that we are all on the same page, and in that regard we shall be moving on to the next assets on our watch list. So the next asset on our watch list is the USTech100, popularly known as the Nasdaq. And in fact, I will say that this asset here is the one of the most profitable. I think it's the most profitable asset on our watch list since the beginning of the week, as we have continued to buy this particular assets after the breakout of that 16,342 level right here, and then we also capitalized on more opportunities at the breakout of the 16,400 level. So it has been quite a tremendously profitable week, and at this point you will see that price action is finding new high as attention turns to the US Consumer Price Index, which is coming up tomorrow to determine if the rally can have more legs to run. Thus far the market continues to raise ahead of the Fed's pricing in 4-6 rate cuts through the year 2024, and with the first cut price to be as early as the month of March, and significant disinflation progress is needed to justify these expectations in this market. Now, for the sake of those who are not part of our live session yesterday and 2 days ago, let's quickly run through what really happened at the beginning of the week right here on the 1 hour time frame, and what led to the decisions of buying this particular asset. So at the beginning of this week, we saw how price for the first 12 to 14 hours, price was initially confined within that range between the 16,342 level and the 16,275 cent area, to emphasize the level of uncertainty that gripped this market at that point in time. And of course, you know how we do it in this community. Whenever price action falls into a range like this, we have no other choice than to exercise patience and wait for price to either break out of the resistance line for buying opportunities or break down the support line for selling opportunities. And prior to the live session on Monday, I did mention that the appearance of the breakdown of the support line doesn't support selling opportunities. As you will see, the nature of this candle, which closed in the form of a hammer candle, is technically telling us that buyers are still in this market. And coupled with the fact that we have a series of higher lows here, we were of the opinion that a breakout of that 16,342 level will be a good opportunity to buy. So we took advantage of our first buy position for the week, had the breakout of the 16,342 level. We also added more positions, had the breakout of the 16,400. So we had roughly, let me see how many pips move. For the first buy position, we had about 300 pips move, and for the second buy position, we had about 260 pips move, totaling 500 plus. And yesterday I did mention that we should move all our stop losses anywhere below the 16,560 and the 16,480, depending on where you move your stop losses to. You must have been taken out of that buy position yesterday. And we did talk about some counter trend opportunities on this particular asset, where I did mention categorically that I wouldn't consider selling if price even breaks down that 16,560 to the downside. So the reason was simply because it's going to be a counter trend opportunity, and I do not feel comfortable selling at that area. However, I did mention that for those who love scalping or counter trend opportunities, or those who love taking small not too significant pips, you can actually take advantage of the breakdown retest. And if you did, you had a privilege of scooping in about 60 pips thereabouts before the bullish momentum began. And remember, yesterday we said that for the bullish trend continuation, that we should be having a buy stop order above the 16,650 to maximize that move. And if you did have your stop loss, your buy stop order there, you will currently be running with about 75 pips in profit, in addition to the significant amount we took at the beginning of the week. And for those of you who are part of this profitable journey, well done, and kudos to you for being on standby to capitalize on this opportunity. And as it is right now, we have the bullish momentum still looks very strong at this point, so I would just suggest you move your stop losses right now anywhere around the 16,700 and the 16,660 area. Let's just leave it around that area, and remember to give enough breathing space for price action to move around. So with a well secured position at this juncture, what is going to be our next line of action for today? Are there chances that sellers can come in at any point in time, or will price continue to find new highs as everyone looks forward to the US Consumer Price Index coming up tomorrow? Now, with the information we have gathered here, and before we go into the details, and of course for the sake of those who are joining us for the first time, let's quickly run through the higher time frame so we can have an holistic perspective into what is really going on in this market. And at the beginning of the week, we scaled up into the daily time frame, where I was able to mark out a couple of trend lines and key levels here. And of course, what we saw after taking into consideration nature of price action since the month of August of last year, it was quite clear that the market has been on a bullish momentum. We had an ascending trend line to buttress this, as you can see here. After connecting some pivot lows and pivot high, we saw how the trend lines played a major role in determining the direction of price action in the last 4 to 5 months. Look at what happened here. We saw buy pressure. We saw how price broke down the structure, and selling pressure persist for about a couple of months, as you will see here, before finally price broke back above the ascending trend line in the month of November. And since then, price action had continued to trade above this ascending trend line. Look at what happened here Yeah, at the beginning of the week, we saw a sharp retest of that structure, and since then, price has continued to find higher highs. Now, as a result of this, and for the fact that price remains above our ascending trend line, of course, you do know how we use our ascending trend lines in this community. We continue to look out for patterns and structures that supports the idea of buying that asset. Now, as it is right now, and to make things easy for us to manage our position, we had our key level situated at the 16,175 level, a price level which had played a major role in also determining the direction of price action in the last 2 months. Now, with a beautiful confluence with that ascending trend line, followed by an engulfing bullish candle from that structure, I feel very confident that buyers may likely be dictating the pace for the nearest future. So we still look forward to more buying opportunities, and in fact, if price action can break out the highest point here at the 16,975, we shall feel more confident adding more buy positions to our existing trade. Now, in as much as we place our attention on buying opportunities here, we cannot ignore the potential that sellers can also come in, and if they do, where do we feel comfortable selling this particular asset? Well, the need for this ascending trend line and this key level to be broken is all we need to emphasize an opportunity to sell. So till that happens, we maintain a bullish bias. Now, with the information we have gathered here on the daily time frame, let's scale back down into the 1 hour time frame to see how the market has been playing out since the beginning of the week, and let's see if we can find structures and patterns that we will use to guide our trading decisions for today. Now, scaling back down into the 1 hour time frame, we begin to see things more clearly, and there are a couple of levels which we of course identified here throughout the course of the week. And right now, as of this morning, while I was trying to decipher where price action is likely going today, I was able to identify another level around the 16,715 area, which has been a barrier for buyers for a while, about 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 hours before price finally broke out of that structure. And from a technical standpoint, when price breaks out of a key structure like this, we expect that some point in time price will come back, retest the structure in anticipation of another wave of bullish momentum. So I had a buy stop order above that structure, which I did capitalize on. And in fact, if you had missed out on that opportunity, it's okay. It appears price is coming back into that structure to retest it. And if we continue to see buy pressure around that area, and if we scale down to our lower time frame and we see reversal patterns like double bottom structures, head and shoulder patterns, we could be in for another wave of bullish momentum. So I still maintain a bullish bias on this particular asset. However, if price drops below the 16,750 and we begin to see continued selling pressure below that structure, we could be in for a bearish opportunity, as a breakdown retest could incite a counter trend move. But one thing here is that this will, for me, I will not feel comfortable selling around that area, simply because it is an uptrend situation, and of course we have an ascending trend line here which further buttresses the strength of the buyer. So if sellers come in, price could come into the ascending trend line in the hopes of inciting the third leg of bullish momentum here. And in fact, for counter trend traders, scalpers, and those of you who like taking small pips from the market, we could be seeing about how many pips? Over 100 pips, which is very significant as well. And in fact, if I can see some series of lower lows and lower highs on my 15 minutes time frame or 10 minutes time frame, I could be part of that bearish move. But in the meantime, I want to see how the market would react to that ascending trend line. If it breaks down the ascending trend line, we could see new opportunity to sell. But if double bottom structures or any form of reversal pattern comes in from that area, then we want to be joining an uptrend move. So at the meantime, I maintain a bullish bias on this particular asset until structures state otherwise. So this is my simple view on the US Tech 100 for today. I hope I made myself clear, and if you have any questions as regards to this setup, feel free to let me know in the comment section. So as usual, I will take the next 5 seconds because I have limited time left to see if there are any questions before we move on to the next asset on our watch list. All right. So I see your comment, Nikki74. Moin, good morning to you. Who else is here again? Attention viewers, beware of spammers in the comment section trying to lure you to other platforms. They may scam you out of your money. please note that Xtrend Speed is not liable for any such exposure. So please stay safe and stay clear of anyone who will refer you to other platforms. So thank you very much. And in the absence of no questions, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the GBPUSD, that is the cable market. And in fact, I already have a buy position running at this particular point in time. Yesterday, we talked about the bullish expectations in this market, and of course, we did capitalize on some buying opportunities at the beginning of the week. Remember, we did capitalize on the breakout of that key level situated at the 1.272, added more positions at the breakout of the 1.273 area to give us 2 positions at the first day of the week. Though the momentum wasn't strong, as we saw bearish momentum come back in, and of course you know how we do it in this community. When price moves significantly well in our favor, we moved our stop losses accordingly to secure all position. And if you had done that, you must have been taken out with a reasonable amount of profit, or at a worst case scenario, break even. And as it is right now, based on what we are seeing on the chart, it is quite clear that the GBP/USD is grappling to regain ground around the 1.2700 area, especially during the Asian session, as you will see consistent buy pressure around this area at every point in time price comes into that level. And this further emphasizes how sellers are finding a barrier around that particular area. Now, with the situation we have here, it's more of a risk of market sentiment, and a recent upswing in the US dollar appears to be applying some pressure on the pound sterling. The risk on mood sparked by speculations of interest rate cuts by as early as March 2024, as indicated by the Federal Reserve member, has exerted downward pressure on the US dollar. On Monday, we witnessed Atlanta Fed President Raphael Bostic citing a more significant decline in inflation, suggested the possibility of 2 quarter point cuts by the close of 2024. And adding to the narrative, the U.S. Fed Governor Michelle Bowman yesterday stated that while the current policy stance seems adequately restrictive, there might be a need to lower the Fed's policy rate if inflation approaches the 2% target. Now, eyes are now on the Bank of England's governor testimony later in the day for potential cues on what is likely going to be happening. Now, the question lingers on for today is, can the pound sterling find support against the US dollar? Well, as price action remains above the breach descending trend line we spotted here yesterday, I'm of the opinion that price may still continue to the upside. Remember what we saw here at the beginning of the week on the 1 hour time frame. After considering this impulsive move all the way to the upside, before we begin to notice some bearish pressure at the beginning of the week, and immediately price broke out of this trend line, we capitalized on that uptrend, which of course shares a confluence with our key level at the 1.272. And of course, from a technical standpoint, whenever price breaks out of a key structure like this, we expect at some point in time price may come back, retest the trend line in anticipation of another wave of bullish momentum, which is exactly what appears to be happening right now. The market tested the trend line right here, and since then price has been finding some higher lows at this point. So for me, I still want to consider buying or adding more position, and as a result of this, I already have my 1.272 level triggered, and you should also have it triggered by now, as we did emphasize that since it is our key level, when price breaks out of the key level, we want to be looking out for patterns and structures that supports the idea of buying that asset. So as it is right now, I maintain a bullish bias and in fact looking out for more opportunities at the breakout of the 1.273 and then add more position again at the breakout of the 1.27650 area. So let's see how far this momentum will go. I maintain a bullish bias here. Let's see how it will go. However, in as much as we're looking out for buying opportunities, you know how we do it in this community. We want to ensure that we keep a balanced approach as possible. So while we look out for buying opportunity, let's also take into consideration the potentials of the sellers and what is it that will happen on this chart that will make us change our bias from bullish to bearish. Well, if you would ask me, I would like to see price action take out the lowest point price action has been for this week, which is around the 1.27650 area. So if price can take out this area, break it, retest it to the downside, I would like to join a bearish move. But one thing for sure here is we want to see some confirmation before we jump into any sell position, because price still will remain above this descending trend line. So I would like to see a breakdown and a couple of retests of structure before I can feel confident joining a bearish move. So we want to take this into consideration while we continue to monitor price action. But if you would ask me, I doubt if sellers will come in today, but if they come in, let's be on standby to capitalize on that move. So this is my simple view on the GBPUSD. If you have any questions, feel free to let me know in the comment section. All right. Oh, this is 26750. Please, this is a typographical error. It's 26750, while the one up here is 27650. Okay, so please adjust that accordingly. So if you have any questions, let me know in the comment section. I will take the next 5 to 10 seconds to see if there are any before we move on to the last asset on our watch list for today. All right. So in the absence of no questions, I want to assume we are all on the same page. So Muska, I saw a comment now from Muska. Muska says, so this is a potential buy opportunity. Yes, I just mentioned that. As long as price remains above the key level, let's be on standby to capitalize on buying opportunities only if price breaks out, which I told you earlier that I already have a buy position triggered. And then please give enough breathing space for price action to move around. So you want to be having your stop losses somewhere around the 1.27 area. That's dovetailing to about 20 pips, or you can put at a maximum of 25 pips depending on where your entry point is. So give enough breathing space because of the volatility that can build up prior to the Bank of England's governor's speech and of course the Fed official speech from the United States. So ensure you have a wide stop loss in that regard. 20 pips, good for this kind of position. I hope I made myself clear, Muska. Mr. Zul, good morning. Moin, good morning. Kara's one, hello to you. I'm glad to have you around with us this morning. So in the absence of no further questions, I want to assume we are all on the same page. And in that regard, let's move on to the final and last asset on our watch list for today. So the last asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And yesterday we recorded our first loss on the XAUUSD, as we did, remember, capitalize on the buy opportunity had the breakout of the 2035 level. Price did break out of that structure anyways, moved about 50 pips in our favor before it crashed back down, taking us out of that buy position, hitting our stop loss just right around the $2027 area. But it's okay, we're still in the midweek, and I'm very confident that there is still new opportunities for us to capitalize on before the week ends. And if you look at what has been going on here since the beginning of the week, it is more of a consolidation phase and choppy scenario, as you will see how price action has been trapped within the 2035 and the $2017 area to emphasize the level of indecision going on in this market. And it's not a surprise at all, as we all know that market participants are anticipating the CPI data coming up later tomorrow. And as a result of this, we might be seeing some indecisive market structure happen in this market. Well, for me, if you look at the structure, gold is still struggling to gain some traction, and the reduced likelihood of a more aggressive policy easing by the Federal Reserve in 2024 is bolstering higher US Treasury bond yields, consequently acting as a supportive factor for the US dollar and diverting capitals away from safe haven assets such as the gold. Now, you know how the US Treasury bond yield is directly proportional to the price of the price of the US dollar. And if the Treasury bond yield rises, US dollar rises as well. And if the US Treasury bond yield drops, the dollar also drops. And the little uptick we saw in the US Treasury bond yield is giving a decisive selling pressure on the XAUUSD. Well, despite these challenges, gold may still find some support from ongoing geopolitical risk tied to the Israel-Hamas conflict and persistent concerns about a sluggish economic recovery in China. China, being the world's second largest economy, has an influence on the global market as well. And this, of course, is going to be favoring the gold commodity or safe haven asset. At this point, traders appear to be adopting a cautious approach and, in fact, holding back from making fresh directional commitments, awaiting the release of the consumer inflation figures from the United States, which is scheduled for tomorrow. Now, we all know that the outcome of the US CPI report will shape expectations regarding the Fed's future policy action, hereby influencing the demand for the US dollar and subsequently determining the short-term trajectory for safe haven assets such as gold. At this juncture, I still remain very bullish on this particular asset. In fact, if you look at it from a technical standpoint, since the beginning of this week, after price action tested this $2017 area, remember we had our sell position at the beginning of the week, selling below the structure, scooping over 100 pips. We did move our stop loss accordingly. We must have had about 50 pips thereabouts, or a worst case scenario break even on that one. And since price tested that level, we can see the second attempt by sellers to break down the previous low failed woefully, as we saw price close around the $2027 area. And in the last 5 hours, we saw another attempt by the sellers breaking down this ascending trend line. And then when it broke down the trend line, we saw that the lowest point it got to was the 2024, was unable to break the previous low. And for me, this is a sign that buyers are gradually building up some momentum behind the scenes, though we might not see a significant or aggressive bet to the upside right now because of the CPI data coming up tomorrow. But it looks very bullish for me at this particular point in time. So as a result of this observation, I will be looking out for buying opportunities again above the $2,035 area. And please, let's give enough breathing space for price action to move around when price triggers that buy position. So having your stop losses close to the $2,027 area or around that area will make quite a lot of sense, dovetailing to about 80 to 85 pips on that particular one. And if price can gain traction above the 2035 level, a further breakout of the $2,046.50 level and the $2,050 area will definitely welcome more buying opportunity. So this is what we shall be looking out for to buy the XAUUSD for today. So let's mark out these levels on our chart. Anywhere above the 2035 area seems reasonable for us to maximize or capitalize on buying opportunities on this asset. However, in as much as we're looking out for buying opportunities, you know how we do it in this community, we want to keep an open stance to see if sellers do have a say in this market. And just like what we had on the GBPUSD, I would like to see price take out the lowest point for this week, situated at the $2,017 area, before I can feel confident selling the XAUUSD. However, I also consider the potential of even selling before the breakdown of that structure happen if price can give us something significant. And if you consider the breakdown of this ascending trend line, price, okay, let me show you here. We saw price break down the structure, price came back here, in fact break back above this area. So having a sell stop order below the $2,027 area makes a lot of sense, and let's see how that will play out. And if price continues, then breakdown of the 2017 will welcome more selling opportunities. So the ascending trend line here is going to play a major role in guiding our trading decisions for today. So I would like you to mark it out on your chart, mark out the key levels, and let's see how the market will play out going forward. So this is my view on the XAUUSD. Very simple view. Just mark out the levels and allow structures to mature before jumping into any position. So at this juncture, I would like to ask if there are any questions whatsoever as regards to this current setup. If there are, let me know in the comment section. So I will just take the next 5 to 10 seconds off to see if there are any questions before I round off on today's Extra and Speed Live technical session. All right. So in the absence of no questions, I think we are all on the same page at this juncture. And it's on this note I would round off on today's trade on this session. It has been a wonderful moment with you guys. I enjoyed every single moment. We were able to attend to 4 major assets which are on our watch list for this week, including the USOILSPOT, the USTech100, the GBPUSD, and finally the XAUUSD, all of which we were able to identify simple trading setup using our basic tools such as trend lines, key levels, and chart patterns to strategically position ourselves for the next move. So if you are part of this session, I hope from the beginning, I hope you are able to mark out all the necessary levels we did identify today, as they will be playing a major role in guiding our independent trading decisions for today. And if you have done that correctly, I would encourage you to exercise patience and allow the structures to mature before jumping into any positions. And always remember that every decision we make in the financial market is more or less an educated guess. Until price action hits your TB target, can you be confident that you made the right decision? So in that regard, you do want to be having a well-defined risk management strategy for every trade you take from your portfolio. And for those of you who joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And if you did, you want to be part of our subsequent editions, trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works and eventually be able to use the information gathered here to make your own independent trading decision. And it's on this note, I want to wish us all the best of luck today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and at the same time prepare ourselves for tomorrow's session, which promises to be another interesting and insightful one as we all look forward to the CPI data coming in from the United States. So I wish you best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.